Do you need help protecting your finances as you enter retirement? David Dickens of KC Financial Advisors has got you covered. Welcome to the Cover Your Assets KC podcast.
Glad you're with us today on the Cover Your Assets KC podcast. Walter Storholt here with David Dickens, President, Wealth Advisor at KC Financial Advisors. Today we're talking about 8 key steps to organizing financial records. If you missed the past episode, the most recent one, go check it out. We talked all about different documents that you need to plan successfully based on what stage of life you're in. So we broke it out from your 20s and then to your 30s and 40s, and then for 50 and above. Those were the 3 sort of categories that we discussed. Well, once you get all those documents, among all the other things that you have going on in your financial plan, it's probably a good idea to get organized with it all. So that's the inspiration of today's show. David, I love it. Can't wait to hear all of your organizational tips because you're one of the most organized people I know.
Hey, well, you know what? Personality type that I am, I really appreciate you saying that, Walter. Thank you.
You're welcome. I just can tell just from your preparation for the show each week. So
the thought of this particular podcast is annually we do a shred day for our clients. We have a big shred truck that comes to our parking lot, and from 9 to noon this one happens to be May 17th, Tuesday, May 17th. As you're listening to this podcast and you say, wow, I'm not a client, but I wonder if I could use that. Yes, you can. It's totally open to the public. So swing by the office with your boxes of stuff and we'll shred them for you. Which things to shred? Stay tuned, because that's what we're going to talk about. That's a lot of what we're going to talk about today.
Well, as I said, 8 key steps to organizing those financial records. So let's get to the list. David, what's the first one?
Yeah, so the first one is investment statements. I've mentioned on this podcast before, we do taxes. Amongst the other things we do for our clients, we do taxes. And I just met with somebody 2 days ago who came in, pick up their taxes, relatively simple taxes, but they had brought in each monthly statement from their TD Ameritrade account last year and the 1099 that TD Ameritrade sent to them. And it's really common. I have a number of clients who have kept monthly statements on their brokerage accounts for a long time. And my encouragement to you there is, so obviously the 1099 comes in February or early March, and that lists all the meaningful tax-related activity that happened in your account in the prior year. One reason why we used to keep old statements is because we used to need to know the cost basis. If something was in a taxable account and you wanted to qualify for long-term capital gain, you had to know how much you paid for it. After 2011, all custodians are required to maintain that for you. So if you don't have any taxable investments that were purchased before 2011, I honestly can't think of any reason. There may be one, but I can't think of any reason why you would want to maintain monthly records from your broker-dealer, from your financial advisor, or from your custodian, Fidelity, TD Ameritrade, Schwab, any of those people. Most of those, for instance, if a client comes in and says, hey, Dave, for some weird reason, I need my statement from TD Ameritrade from October of 2018. Well, we just go online and download it for them and get it. So those are archived by these custodians, and it's pretty darn easy to go back and get them. What you really need is a good shredder at your house or a financial advisor that offers a free shred day once a year. But don't lug those things around. I can't really think of any use you would have for those. And you know what? Someone breaks into your house or you're carrying them around in your briefcase and somebody steals your briefcase. That's one more piece of information that somebody has to steal your identity and get into your money. So I would shred those babies as soon as I review them. And if I ever needed one, historically speaking, I know that I could go get one.
That's pretty helpful. Okay, I like that. So get those investment statements organized and taken care of and shred them up. So what about number 2? What's the next key step?
Bank statements. So you might want to retain those. Frankly, most banks, most credit unions, the credit union I use, they'll give me statements back. I can just go online and get statements back as far as I can. So my inclination here is to, first of all, I get my bank statements electronically, and then I print them if I want them. So I don't have printed paper on these coming to my house. And I'd encourage you to do the same. If you happen to need paper, honestly, once you reconcile your bank account each month, I would throw that in the shredder as well. What I would encourage you to do, and I could have mentioned this prior with investments as well, but so a lot of things are going online these days, and I think it's awesome. But there are also a lot of bad guys online that are trying to get into your accounts. So one thing that most financial institutions and most financial custodians of your stocks, bonds, and et cetera are going to do is offer you something called two-factor authentication. And if you haven't put that in place, I'd strongly encourage you to do so. So what is that? Well, for instance, when I'm logging into my credit union account, I put in my username and password, and I click start or go, and they send me a text to my cell phone with 5 or 6 numbers that I input just to verify that it's actually me. So if someone happens to have my username and password, well, they're still not going to get into my accounts and move money around or move money out because I have dual factor authentication in place. That's the same thing that we use at our office when we log in to look at everything we do. But that's becoming way more common. And if you have if you have financial companies in your life that offer dual authentication, I'd encourage you, don't pass up the opportunity to get that set up. You don't need the paper. Throw it in a shredder. Do as much of that with logins as you can. Just make sure your stuff is hiding behind 2 levels of password security.
Very good. Yeah, that two-factor authentication stuff can be very helpful for those who are nervous about having online accounts and online passwords and those kinds of things. So great that they can make those advancements to put people's minds a little bit more at ease. All right, what's number 3 of 8, David?
Number 3 would be your tax records. And so we get a lot of questions on this. How long do I have to keep these? I'm a little bit guilty of this too. But the longest you need to keep tax records is 6 years. But that's only if frankly, I take that back. You need to keep them forever if you didn't file a return or if you failed a fraudulent return. If you filed a fraudulent return. Well, if you did those, you're probably not listening to this podcast. So for our audience, really, you could probably do with just 3 years of tax records, unless you've had something like maybe you've claimed a deduction for bad debts, or maybe you had a loss on some securities that became worthless. Then you'd want to keep those records for 6 years. But in the vast majority of circumstances, if you just keep your last 3 years of tax returns, you're going to be good. And the rest of them can go in the shredder.
That's easy enough and good to remember. Yeah, the less tax records I have to keep on hand, the better, as those things take up a lot of space.
Oh my gosh, it's amazing, and especially all the collateral, the stuff you had to put together. It's not just your 1040,
yeah,
and the other forms. It's all the stuff you had to gather up to create the tax forms.
Yes, very, very big point there. All right, what about the 4th key step?
So related to that is, what about documents related to my current tax return, my current year's tax return? So this is vivid in my mind because yesterday I met with a gentleman who came in with a shoebox full of documents. 90% he didn't need for us to prepare his taxes. And the reason is, a couple of years ago, Congress raised the limit of the amount that you get on a standard deduction. Very few people, higher net worth, bigger mortgage you have, bigger piece of real estate you have, which has higher taxes, those are people that are still going to itemize. But the vast majority of Americans no longer itemize because the standard deduction has gotten to be so big. If the things you used to itemize, and if you're married, filing jointly, if they don't amount to, the number goes up each year, but this year, if you're over 65, maybe it's $27,800. If your medical, your dental, your taxes, your contributions, if those things don't add up to more than 27 grand, you don't need to keep receipts for anything. The IRS just gives you $27,800 of deductions just for showing up with a pulse. So most people, especially most retired people, unless they run into a health problem, there is no way that they're going to have $27,500 of deductible items. If they're a really good giver, hopefully they're using a qualified charitable distribution, and they don't need to itemize that either. So lots of different ways to get around maintaining all of these documents that prior to a couple of years ago you did need for itemization. You no longer need it because the standard deduction is so big. So if you keep those things, don't bring them into your tax preparer because they're not going to use them.
That's great to know, David. All right, we're halfway through, 4 down, and how about number 5?
Well, number 5 is what I'm going to call difficult to replace documents, like, for instance, birth certificates. Maybe you might have your original Social Security cards, marriage records, deeds to property, car titles. Maybe you were discharged from the military, those kind of things. Those, you have a choice. You need to retain those basically forever, maybe in a safe deposit box at a bank or a credit union. I gave up on the safe deposit box thing a number of years ago, and I just use a fireproof box in my home for those for those documents that are important to me. But if someone breaks in and steals them, I mean, honestly, other than my Social Security card, it's not going to be of particular help to them. So a fireproof box at your home, or maybe a safe you have at your home, is perfectly great. If you feel better about a safe deposit box at a bank or a credit union, go do that. The one thing I would say about a safe deposit box is if you have those important documents, including maybe your estate planning documents, and you have them in a safe deposit box and you die, well, somebody has to have the key and be a joint owner of that. Maybe that's your spouse. But if you're the second spouse to die and your heirs need to get to those documents, they're going to have a court order to get into that safe deposit box. So just be super careful as to how you set up your safe deposit box ownership and who has keys, if that's the way you're going to protect those difficult to replace documents.
Helpful to know that, David, because I can just see that being, a hassle to lose those things, but also not necessarily the end of the world. So kind of use your own level of comfort to how difficult you want to make it to access those things, right?
Yeah, and how difficult you want it to be on your heirs. A lot of times, like we spent in our last podcast about beneficiary designations, well, you don't really have to do anything, but it makes it super difficult on your heirs when they have to clean up all the financial disarray that you had in your life, in addition to grieving your loss. So, the more organized you can be, then it's way easier on the people that you leave behind when you go to the next place. And it's just, there are a lot of loose ends I've seen being cleared up and that I've helped to clear up, that honestly it was needless to have to do that. It's just kind of the way it happened.
Very good. All right, 5 down, and let's get to another. What's our 6th key step?
Well, this is kind of related to the difficult to replace documents, but wills, powers of attorney, other estate planning documents, if you use an attorney, then they're going to have copies of that. If you have a financial advisor, they might have copies of that. If you keep them in your safe deposit box and you didn't set up a secondary owner, the people that need those documents may have difficulty getting in. You might keep them in a fireproof box at your house. You would just want your heirs, your powers of attorney, those people to know where those documents can be found. Maybe, if you have a really good family relationship, maybe you give copies of those documents to your key heirs, definitely to the executor of your estate, probably to the person you've named as your power of attorney, healthcare or financial. So those are documents that you want to be easily found once you're gone. And maybe you put copies in the hands of the people that are going to be responsible for executing on them.
All right, easy enough for those. Glad those were tied together a little bit, number 5 and number 6. 2 to go. What about number 7?
So home improvement related documents, frankly, maybe you don't know this, but you get an exemption on a capital gain that you have in your home. It's like $500,000 for married filing joint people. And whatever you paid for the house, plus whatever you spent to improve or upgrade it, that's the cost basis on your home. And so what you just as soon have happen is when you sell the house, you don't own it. You don't owe any taxes on that sale. So you would want to hold on to those types of documents and the documents that were originally included when you bought the house. You'd want to keep those at least as long as you own that house, and better safe than sorry, shred them a year after you sell that property.
Yeah, I actually really appreciated this, not from a standpoint of home improvement documents being saved for my, for my own benefit. This was actually the previous owner of our house kept very meticulous documents of all of the upgrades that they made to the home and passed those on to us when we moved in. It was really neat to see when they did the addition to the house with they built a garage and a mother-in-law suite above it. It was neat to see how the designs actually started and then how it ended up.
Oh,
and
that is really fun.
It's so funny because the whole time that we've lived here, until I found that particular document, I always said, why didn't they put the laundry room in this room? Like, there's this perfect storage room that looks like it was intended to be a laundry room, but there's no laundry hookups in there. Instead, they put it in a really weird location. And I found the original design did have the laundry room in that room. And for whatever reason, they decided not to put it there, and they moved it to a different spot. And it's now in like a really inconvenient location. I'm like, why didn't they keep it like it was supposed to be? In any event, so but it was at least interesting to discover the history, a little bit of that. So pretty neat to. That's what's the cool about when you hang on to stuff like this. It's neat to look back and years later, and you uncover not necessarily just the home improvement stuff, but even from some of the other records. It's interesting to look back on some of those things. I can imagine looking back on your bank statements from a decade or 2 decades ago and looking at what you spent your money on back then, right? Probably very different.
Well, keep PDFs of those up in the cloud somewhere and not in a filing or a box in your basement.
That's right. Exactly. Good point. All right. What's the last key step to organizing financial records?
So the last is receipts for particularly valuable items you might have. And this really boils down to for insurance purposes, or if you had a fire or a theft or a tornado ripped up your house and you're trying to explain to the insurance company, well, here's what I had, here's how much it was worth, here's the replacement cost for this kind of stuff. One idea that I've heard about for decades, because back when camcorders were invented, but now you could do it on your iPhone. I personally, full and fair disclosure, I have never done this. But one thing that you can do and maybe should do is, if your house burned to the ground, you're like, well, gosh, we had the couch and we had the curtains and the this and that and the other that an insurance company is happy to replace. You just have to know what they were. So if you had a walking video of your home, or pictures of your key rooms, of your home's contents, that would be a dramatic benefit to you trying to reorganize your life after something major like that happened. So again, I don't have that in place. I know people who do. And the probability of your house getting destroyed by a hurricane or a fire or a tornado is really remote. But if it does happen, records like that would be super important to putting your physical life back together.
That's helpful, David. And again, a great way to cap off our list of 8 key steps to organizing financial records. And we will recap this list in the show notes section of today's show if you want to see it in writing, so you can kind of have a quick reference guide to go along with the episode. So definitely go check that out. If you've got any questions for David or need some assistance assembling all these things together, this is the kind of conversation that David has with you during the planning process, making sure that you're not only well organized financially, but then it all fits together in a plan that's going to get you to and through retirement and take care of all of the major questions that surround your financial future. To get in touch, you can do it a couple of different ways. One, give them a call at 913-317-1414. Go online to coveryourassetskc.com or email ddickens@kcfa.com. And we'll put that contact info in the description of today's show again, so it's easy for you to find. David, thanks for the assistance and the help on the show today. Enjoyed the walkthrough, and we'll look forward to chatting with you next week.
Yeah, and just a final reminder, that annual shred day for KC Financial Advisors, May 17th. You don't have to be a client. You just got to show up between 9 and noon at our office, and if we can help you by throwing a big couple of boxes of stuff out of your basement into the shred truck, please swing by.
And it's just kind of fun and satisfying to watch things get shredded, too. There's... There's like
for sure.
just a small little sadistic element in all of us that just loves things get shredded on their way in there. So a little bit of a satisfying event too. Fantastic. Thank you, David. We appreciate it.
Talk to you next week.
Sounds good. New episodes every week. Come back and join us once again right here on Cover Your Assets, KC.
Investment advisory services offered through ChangePath LLC, a registered investment advisor. ChangePath LLC and KC Financial Advisors are separate companies.